Welcome back to Alberta Primetime, and on the Vocal Point tonight, what does today's massive market plunge mean for your savings? And Alberta energy companies were among those falling fastest. Our Monday Money panel will also debate changes in our natural gas market and whether Alberta might be starting to win the war for the Keystone Pipeline. Russ Dratt was a senior investment advisor with Canaccord Wealth Management. Todd Hirsch is ATB Financial's senior economist, and Shafik Hirani is a senior executive financial advisor with Investors Group Calgary. Good evening, everyone.
Hi, Jen.
Hello.
Good evening.
Well, markets reacted fast on data today, showing China's economy grew only 7.7% on the year. Oil dropped $2.58 a barrel. Gold plunged $140.30 an ounce. In Toronto, the S&P TSX Composite was down. And as well, we saw the Canadian dollar fall. New York's Dow Industrials lost. The NASDAQ fell. Russ, how concerned should Albertans be if they've got their savings invested in the markets, their pension plans there?
Well, it's just becoming a self-fulfilling prophecy regarding the gold and oil prices, and the global economy is just slowing. But it's kind of ironic that China's 7.7% growth is
we think that's bad.
It's bad. Most economists would love to have that. So it's historically, the springtime is a bad time in the markets, but it seems to be moving faster and more furious on the decline side.
And how long will it last? We're seeing the one-day plunge right now. Shafik, you're getting calls, I'm assuming, perhaps from some worried clients in Calgary. What are you telling them? Is it going to continue to be grim?
Yeah, you know, Jennifer, it's a scary time, and there's a lot of blood on the streets. But, you know, this contentious sort of belief that you try to catch a falling knife, it's just not true. And I'm telling people, just basically sit on the sidelines, let it ride it out. This whole notion of buy low, sell high is a little misguided, and sometimes the trend is your friend. So you don't want to catch a falling knife right now. There's too much worry about China trying to have a soft landing. Gold was down 10% almost today. That's its worst drop since 1980. The commodities are down. The Canadian currency is down. Not the time to be jumping in just yet.
And hopefully, I guess if you've had a conservative portfolio or a fund where they're watching for these kind of dips, you've got some protection built in there in the strategy. But Todd, China's slowing growth, Europe also a factor, still struggling with debt crises. The U.S. economy still not really on solid ground. Alberta resource companies were some of the firms that took the biggest hit today. How are they looking?
Well, I guess it varies across what company you're looking at, but overall commodities, energy commodities, you know, they're getting hammered pretty hard today, the oil side anyway. Natural gas is a little bit of an interesting story at the moment, and we might talk about that a little bit later. But overall, resource producers, commodity producers, they've got to be just sitting on the sidelines, bracing themselves, because we're not sure what kind of trend we're in. But on the topic of gold, I just think it's really interesting that, you know, for so long, these gold bugs have been saying, well, buy gold because inflation is going to take off. All the money being printed in the United States and other central banks like England, they've been waiting for inflation to take off, and that's why they've been buying gold. I think now they're finally getting the message. There's not a whiff of inflation in the global economy. Now with China's economy slowing, I think that has been part of the reason why we saw gold getting hammered today. It's just a run for the exit because there's no dividend paying in gold.
And we will talk about natural gas in a moment for sure. First, Russ, when we look at Europe, it's banks and governments selling off gold as they deal with their bankruptcies today. The head of the European Union, European Bank, said the Zone 17 nations need some kind of authority to quickly close these banks that are going out of business before there's huge drains on the nations that they operate in. China's slowdown, just a huge ship that's not easily going to change course quickly. How long do Albertans have to deal with these, and what is the fallout for us? Talk a little bit about, you know, Shafik mentioning your position in the market.
You know, the markets aren't really... You have to understand, markets are based on future growth. Where is that going to come from? So the only fundamental right now is charts, technical, computer. There's really not much fundamental growth anticipated by anybody that I know of. And if China does tumble, that's going to have a huge impact on China. So
where do you go?
So as soon as you fall below these technical support levels like gold, as an example, it's just run for the doors, shoot the investment first and ask questions later. So it will rebound, it will come back. It's just that where and how. And if you're reliant on this money in the short term, I certainly hope you don't have a lot of resources in your portfolio, because that's not the sector for stability, stable growth.
You've talked before about getting into dividend yields, real estate investment trusts, some things that are more guaranteed.
That's what's been working the last 2-3 years. So so many people make the mistake of trying to anticipate what the market's going to do. React to what the market's going to do, but not in a panic level. If you have a game plan, that's 90% of it.
Shafik, we will see more perhaps in the next few days that will give us an indication on how sharp the pain will be here. Talk about what's coming up tomorrow and the rest of the week that you're watching.
Yeah, you know, there's a lot of big news coming up this week. On Wednesday, you have Mark Carney and the Canadian Bank of Canada's interest rate announcement, and it's rumored that Mark Carney might actually announce his successor, and so that should make pretty interesting move for the Canadian dollar. And if you're an investor in Canadian currencies, then that should be something to keep an eye on. Also, inflation numbers are out again. Like Todd mentioned, inflation is very low in the States. Look for 1.7%, and Canada look for 1.1%. And the G7 is having, the G20 is having a meeting on Thursday in Washington, and look for some political rhetoric there, and all those should cause the markets to sway one way or the other.
A big economic indicator tomorrow will be interesting from the Federal Reserve production numbers. Can't wait to see what they say. Next up here on Alberta Primetime, though, could our province be gaining the upper hand in its battle with environmentalists over a new pipeline our oil companies say they desperately need? The Money Panel is back with that and more in a moment. Welcome back to Alberta Primetime and the Monday Money Panel. Are Canadian politicians overdoing the pitch for the pipeline that Alberta oil producers say they desperately need? Todd, we're seeing a no-holds-barred full-court press now from Premier Alison Redford, from Prime Minister Stephen Harper. Are they doing enough? Could they be lobbying with any other ammunition? It seems to be they're campaigning as if this is a life-and-death economic issue for Alberta and the country.
Well, I don't know. It's a little bit in the world of politics, which isn't my specialty, but I don't know if there is a downside to having our Premier and the Prime Minister this engaged in making a pitch for a project. I think there's absolutely every upside for them doing that. It sends a different message. If it was just the president of TransCanada Pipeline down there, you know, that's one thing. But this is, you know, these are political leaders of Canada and Alberta. I think it sends a really positive message.
And we're trying to get a feel for whether they're turning the tide or not in terms of what the White House will decide, whether it will approve the pipeline or not. Russ, what is the street saying here in Alberta and around the continent about the chances for Keystone XL now?
The feedback I'm constantly getting is we're not in a position of power. There's no motivation for Obama to move forward with this. Oil inventory levels are at a 22-year high with what's going on down south for drilling. You're looking at there's no security issues, foreign security issues at this point, and major environmentalist opposition. So I'm sure, I would think he'd want to go forward with it, but he wants to be able to say, I had no choice. My hands are tied, you know, so that the environmentalists and the political
doesn't have a good reason anymore.
Doesn't have a good reason, especially with 22-year high inventory levels.
Shafik, what are you hearing? What do you think?
I hear the opposite, and you know, it's funny because if you really read between the lines, Prime Minister Harper has come out with this big editorial in the Globe this morning calling it Team Canada. And so he's been pretty quiet for the last couple of years. And Alison Redford's been down to Washington 4 times in her 18-month tenure. And when the Prime Minister's office, along with his counterparts, start saying this is a collective effort and we're lobbying it, you might want to think that maybe there's something that we should read between the lines that he's now taking credit for. So, you know, Obama said it's going to come out this year. We're looking for a 6-month decision. It's already behind schedule, and this is economically vital for Albertans. So if you are an investor, read between the lines. When Harper comes out and says, listen, this is Team Canada, this might be positive news going forward.
You could read it a million ways. It could be really negative too. I don't know. We will wait and see, but your thoughts are interesting. Thank you. And we want to ask Todd, natural gas also kind of an interesting market right now. A long winter is good for, well, natural gas companies. Todd, what's up?
Well, it's really hard to say, but for a long time I've been waiting for a recovery in natural gas, and it seems to have been happening very gradually, very quietly behind the scenes. Everyone's busy talking about oil sands and oil pipelines. In the meantime, natural gas prices have almost doubled in the last year or couple of years. They're still too low for Alberta producers. Most Alberta producers need gas around $5 or $6 an MMBTU. Right now, they're still trading at around $4, lower price for the Alberta benchmark price. But I think it's moving in the right direction, and I think as the U.S. economy gradually gains some momentum, we're going to see increased demand for natural gas for electricity generation. I think natural gas in a year or 2 years could be the white knight that sort of saves our hides here again in Alberta.
What's helping it, Todd?
Mostly it's demand coming from the U.S. The colder winter that they just went through, I mean, that really drew down the inventory, so their inventory is a little bit lower than what it was expected to be. But it's most of the growing demand for natural gas and internationally. Right now, we can't export much natural gas, the liquefied natural gas to Asia, but everything's moving in that direction. I think people are sort of getting ready for higher natural gas prices, and that's kind of bidding up those future prices a bit.
And Russ, Suncor announced today it is selling its Western natural gas assets, except its Montney play in BC, to the British company that runs Direct Energy here in 10 provinces and Qatar Petroleum. $1.1 billion the sale. Is gas a buy now for investors? We're listening to Todd as well.
I would think there's some pretty astute minds at Suncor. If they're selling natural gas projects, what does that tell you? Basic demand. Right now, you're at a 5-year average. Historically, the last 3 years, natural gas has been at the upper end of the 5-year average. So, I mean, that tells me a lot.
But someone's buying them from them too.
Absolutely.
There's a buyer.
Absolutely. And then, you know, we're going to get into the, you know, they're not selling the Montney, which is the liquid natural gas. Every time I do an interview with an insider, it's always about, they never say natural gas, it's always liquid natural gas.
To Asia.
Yeah, so.
Shafik, are Alberta gas producers at the point where they're just cutting their losses?
Yeah, no, not yet, Jennifer. You know, if you look at natural gas, like Todd said, it's gone from about $3 to $4. And the challenging thing is that there's been a lot of inventory buildup. So a lot of these refiners are just storing the natural gas supplies, and the U.S. itself is now exporting natural gas. Okay. So as that exports go down, there will be demand, and it looks like it should go up.
Just a cute thing to end on here. Perhaps it's a sign of the great continuing economic prosperity in Alberta. Statistics Canada is showing that alcohol consumption in our province almost 6% compared to an average 3% nationally. Todd, is this an indication that Albertans are doing well, or do we just have a drinking problem?
Well, it might be all of the above. I think it's definitely a sign that Albertans are affluent. It's a sign that our population is growing. I mean, keep in mind we've had a 3% population growth versus a 1% for the rest of the country. But if you look at the breakdown between beer, wine, and spirits, it's wine. And, you know, and that is a higher, sort of a higher price point item. It's more of a luxury item. And I think Albertans are enjoying that. They've got the income to do it, and that's reflected in good numbers for wine consumption.
Thank you all for your time tonight. Russ Dratt was a senior investment advisor with Canaccord Wealth Management. Todd Hirsch is ATB Financial's senior economist, and Shafik Hirani is a senior executive financial advisor with Investors Group Calgary.